G'day, this is Johnny Seville, and this is your executive summary for the 5th of November. Stock trade setups for Thursday. Yes, the market broke back down today. Closed inside the open range, so we're still testing each way on the S&P 500. The volume wasn't very much different yesterday. 4.28 up yesterday, 4.09 down today. It'd be very interesting to watch what happens in the overnight futures, but I wouldn't be surprised if it came back down here and touched the trend line, albeit the bias is still up. So we'll continue to monitor that slight divergence here in the money flow. Now we've got, obviously there's in the long term we've got a lot of short positions that we're holding for big one trades and so forth. We've also talked about a few new short positions last night, one of which hopefully will work out quite nicely today. RDEN. We talked about this is an earnings play. I talked about buying put options on this. Those were up about 15 to 20% today. I also took a stab at the November puts towards the end of the market, seeing how it was dropping, and I bought some of the November $12.50 puts for around $1.10, $1.15, I think it was. So now they reported after market and missed, and revenues I think missed as well. But it basically bad news. You can see that the stock wasn't reacting well at all today. The volume yesterday was 69,000. Volume today 262,000, and there was quite a fair bit of liquidity to get in easily into those options. So took a punt at it there about 10 minutes before close. So if this drops down, we could get a drop to to basically support levels are going to come in around here at 11.25, but also here at the trend line around 10.50. That would be a really nice drop if we can get a profit around there. On any big gap down, as soon as we start to see support, I'll look at exiting those shorts. If you're in longer dated ones, I would still consider exiting those if you've got a nice big chunk of profit in the morning. Okay, ZFGN was the other one worth mentioning from last night. Obviously, we had indicated this one as a long, but as a bit of a watch, waiting for it to break through the 9-day moving average. It broke through the 9-day moving average today, so this could be an excellent long here, and at the current prices, or down to support at 11.30, and so somewhere kind of in that range would be where I'd be looking for my entry criteria. I'd be throwing a stop loss in below the low of this candle at 10.35. So there's a fair bit of risk involved on that one from a stock side. So I would limit how much capital I'd be looking to put in, but the upside's quite obviously quite generous, and the rally potential on this could be all the way up to this shelf of support here around $21. So I'd look for it to fill the gap. That's basically where my first target would be at 18.94. Let's have a look at what the Fibonacci's tell us. So there we go. Let's see. Yeah, right there. So there you go. There's the 22.3. So yeah, my first target on this would be looking at 18.23 as a target. So from 11, say 11.60, or basically where current prices are at, is where I'd be happy to take it. But if you look at a rally on that from say, let's say 11.60 up to for 18.23, we've got a $6.60 reward. So that, even if we had a 3-to-1 risk-reward ratio, that still allows us to take $2.20 risk. So 11.60 down to say 9.40 is still a 2-to-1 risk-reward ratio. Now the low on that candle is 10.35. So putting a stop criteria at say 10.23, pardon me. Still puts us into well beyond a 3-to-1 risk-reward ratio. So what you want to do, though, is, because obviously the risk percentage is high, is I would decrease the level of capital. Of course, the other way to go about that would be also to look at the option chain on ZFGN. to the long side. Again, I'd be looking at April, May type of expiration, and taking a look at those. We'll obviously review those options tomorrow in Trading Room, but basically anything looking at the $12 calls, $14 calls, either of those two strike prices is where I'd be looking at. So just out of the money, so to speak, and a few months out. Okay, so in terms of some I've got like a bunch of trades all coming up. I've got 1, 2, 3, 4, 5, 6 possible shorts. We've got a bunch of possible longs. I'll try to restrict it to some of my favourites though. CCJ I thought was quite interesting. It's a Canadian-based mining company there, Cameco, and this one's been rolling over fairly nicely. Looks like it's part of a complex head and shoulders pattern with a head rolling over right now. So basically, anything below 1350, I'd be happy to get into that one at. I'd be throwing my stop loss at 1423. So again, above, so below 1350, stop loss at 1423. So we've basically got 73 cents of risk there, but the target would be all the way down to the neckline. So we're looking at a target down to essentially 11.23. So our reward is $2.23 for 70 cents of risk. So we've definitely got our 3-to-1 risk reward ratio there, and that would certainly be something I'd be happy to play options on as well with a $13 put if that's available. Which I'm sure it is. So that's a nice momentum down play where you can see it's really rolling over after not being able to get past those moving averages at all. So there's another potential short. Another one I'm watching, but it was a Ruckus Wireless, been on my watch list for a while. And that's looking like it's having its day in the dogfight. Big drop, money flow coming right out of it. Keeping my eye on this one as a possible bear flag play. So as a bear flag play, looking at the possible continuation of that drop, which would take us take us down to these levels, which is right where support is. So I'd be looking at kind of a breakdown below, say 11.20 as a signal for a continuation down to 10.13. So that one I found quite interesting on the bear flags. So roughly about $1. So we can take about 30 cents of risk. So if you go from 11.20 up to 11.50, but of course we'd have the breakthrough then. That would be ample. Now, speaking of flags, that is where the a couple of longs come in. We've got. Well, firstly, before we get to those, here's an interesting play, which is an earnings play. Now, OPK has been just crushed. It's been it's come down quite a lot, but if you have a look. It's kind of really down at rock bottom prices. You've got a lot of money flow accumulation, and some of these healthcare stocks are on fire at the moment. The healthcare is hot, and that is typical of a bullish market, which we've obviously been in since October, and we still are until we get a break of that open range and see where we go from there. But this one, what I liked about this one was actually the level of insider buying that is going on with the stock. And let's just flip over to have a quick look at that. There's your insider buying, and you'll just see this steady flow of constant accumulation all the way back from August at basically $12 and below. Just accumulation. So we're currently at 972, and the stock's set to have earnings. And all this buying is coming from the CEO. right? So that's obviously shows a lot of confidence, as well as the various officers, 10% owner, 10% owner, and so forth. So lots of accumulation going on there. Let's have a look at the institutions. Yeah, nothing really there from back in February. So very interesting kind of speculative play here. It's got that squeeze going on with a positive accumulation. I like this. I mean, I'd be all over buying some $10 or $11 calls. Go out as far as you're comfortable with. But this could be a speculative pop, and this stock's got a lot of ground to make back. I mean, $10 seems to be just the starting point. We could see this easily back up at 12. So I'd certainly have a look at some of those options on that one. But also as a stock play, we're nervous of holding stocks into earnings, so I'd be looking at it as an options only. But just to give you an idea, the $10 calls, as you can see here on the screen, only 15 cents. So looking at the stock, it doesn't have to go up much to see a significant return. Now, there's mixed reports about when their earnings will be. Some report that it's going to be tomorrow, the 5th of November. NASDAQ is saying that it's going to be the 6th. I can't find any confirmation where that's going to happen. So if we get a chance to buy these, I'm going to pick up some of those speculative $10 calls tomorrow. We can also have a look further out. So you can see they're fairly lowly priced. 859 open interest, 162 of those changed hands, and you can see those are those expire this week. We can have a look at November 13th. $10 calls. 15. It's surprising to see this trading weeklies actually, but that surprises me. But you can see that the bid and the ask there, 15. So I'd probably go for the 1050s next week. But then you can have a look at some way out of the money ones as well. Let's have a look at to June. So look, June $12 calls I'd take a stab at $1.10. So just simply because we don't have a confirmation on the earnings, that's why I'd be looking at next week for the speculative ones, and then June next year, $12 at $1.10. So there you go. So there's a couple of options there. Now, so onto the flags. Here's a couple of flag plays for those of you who are also looking for the bullish hedge on this market against some short positions. ATEN, we have a flag play here. This has had a nice big upward movement. It's consolidating in what appears to be a pennant type top. So I'd be looking for this as a possible entry around 760. So give or take a few cents. So in this zone, anywhere kind of below 763 or down to 755. I'd look at a stop loss at 733. And I'd look at a target of $9.07. There's been a fair bit of insider buying also in the $6.80 level on this stock previously, so it doesn't seem like the insiders feel that this is overvalued at this price by any means. BIOS. Is the other flag. BIOS looks like a good play from $2.60. Or even just a little bit lower, but it's at $2.55, say to $2.65 in that range. It's going to probably find it consolidates at $2. The exact price I was kind of looking at was right here at about you can see 266 seems to be where that breakout point is. So I'm just going to kind of go in there. Yeah, at 266. So anyway, so try and snag it for 260. I'll try tomorrow. But as long as it's below say, that 266 area, I'm happy. And I look at 244 as a stop criteria, but $3.40 as a target. So a good 80-cent potential there, obviously, which would be significant. And also something that you can consider options on. So this is this is your wrap-up for today. There's a lot more stocks that I've got on my list, but don't want to overwhelm everybody. Oh, one other. I will give you one more. This one looks like it's... This is the first one I found. This was an old trading favourite, Arena Pharmaceuticals. Again, a lot of these pharmaceuticals company really in favour with the market at the moment. This one is coming out of a consolidation. We could also, in fact, argue that there is a possible inverse head and shoulders there, which I'm just noticing, in fact. So there you can see that Eve and Adam, head and shoulders, and so if we look at that as a possible extension, and then we move that over to the right, we're looking at a possible rally here from $2.20 to $2.87, which would coincide just kind of really where that previous shoulder was. So I look at a 277 from 220, so we've got about a 57, or 273 actually I'd look at as a target. And that's coming from around the 220 area. So anything under 225, for example, is what I would accept. And so what I'd do is I'd set a buy stop. What's the high of today? 225. So I'd set a buy stop at say 227. In fact, so it has to break a new high, and then rally up to 273 potential. So that's about that's at 47 cents roughly. So that's 20%. So that gives us with a 3-to-1 risk-reward ratio, we could risk 20%. About 15%, and still be healthy. So I would set my stop loss on that just under the low of the candle here at $2.02, and then I would adjust that after the entry. Okay, so that's those are some longs and shorts and option plays, something for everybody, and I wish you the very best in trading, and we'll see you all in Trading Room tomorrow night. Take care.